Are prescription drugs taxed in this particular bill?
There is no exemption for them. The exemptions are, well, there are a list of particular items that try to get at just the commercial activity. The other exemptions are motor fuels and groceries as defined in SNAP, and then the healthcare providers that pay the medical provider tax. Those are the three exemptions there.
So prescription drugs would be part of what would be taxed under commercial activities revenue.
Yeah, there's no exemption for them right now.
You and then just say follow up.
Go ahead.
Because I'm happy to do that. I'm not ignoring you. Okay.
I figured you weren't.
Okay. So beer and wine, are they part of the grocery exemption?
They are.
No. Co-chairs, Senator Knopp, my understanding is this definition is written essentially to tie into the federal SNAP definition, and that does not include beer and wine. There is an exclusion for the amounts of the taxes that are collected and remitted by sellers for beer, wine, and other alcoholic beverages, and also for the markup. But the receipts of a seller, aside from the tax, would be not included in that exclusion, so they would be subject to the tax.
I'd like to give reference to Senator Haas.
Chance to talk about the policy reason for that? Yes, no?
Yes,
Is that sufficient?
Well, prescription drugs, I was going to chime in on.
okay.
This was discussed in the subcommittee, and the thinking was with 90% or more of Oregonians having insurance, it didn't make sense that it really would be an exemption for the pharmaceutical industry more than anything else. So that's why it was not subject to an exemption. Now, that may have been different, 20 years from now, or 20 years ago, I should say. But that's why we got to where we got to on prescription drugs.
And Rep. Nathanson.
I don't have anything to add on that point, but on the point of not collecting a tax on an excise tax, not only is it beer and wine and, let's see, how is it? Malt beverages, wine, alcoholic liquor, but we also call out, for example, because these also have excise taxes, marijuana, transient lodging taxes, universal service surcharges, the 911 surcharge. There are quite a few things in that list where the business doesn't pay a tax on the part of the cost that included a tax that's already imposed.
Great. Thank you.
So
Senator No?
Yeah.
Follow up?
Yeah. So just for clarity purposes, though, most of us see this tax as, corporations pay taxes, but ultimately their customers are the ones that are going to pay the tax because they're not in the business of, not making a profit. So the sales of beer and wine are part of the revenue and the gross receipts that's going to get taxed. So I think it would be fair to say that we have a beer and alcohol, beer and wine tax, and then we're going to have essentially another tax on that as well then. So they'd be double taxed. Is that fair to say? Same thing would be with cigarettes as well.
My answer would be no.
Yeah. Can you explain?
Sure. Because of
Yeah.
the taxes being paid on the commercial activity of the selling, there's an exclusion for the I can't remember the name of the excise, thank you. The excise tax. That was pretty clearly stated. So that's removed, that's a deduction from the total number of the amount of commercial activity is the tax inherent in that's already been paid for. So the commercial activity of selling the beer is indeed taxed, but not a double tax because you're not paying it on the taxes that the business already paid.
Yeah, no, I get your point, but it's still being double taxed. So,
I still disagree.
yeah. So, Chris, I just want to make sure I understand the mechanics of this. So, a corporation who's making over $1 million is going to be subject to this tax. They're also still subject to income tax, correct? So whatever that is?
Correct.
Okay, so let's say we have a $100 million company. And then it looked in the language like they have two exclusions. So they can either do the exclusion for labor, right? Or for payments made for goods, is that what it?
It's business inputs, yeah, the materials, right, that go into the production of a good or service, or for inventory.
So this $100 million company is going to, let's say they have $40 million of those. They're going to be able to deduct 25%, is it 25% of those? Okay, so they deduct that, and then they're going to pay the tax on whatever's left.
The amounts, so you have I kind of got lost in some of the numbers there, but you have the commercial activity, you subtract the 25%, and then the amount that's left that is above $1 million gets multiplied by 0.49%, and that's this tax here.
And this tax raises roughly $2 billion.
By any, it's targeted for $1 billion a year to start.
So within that calculation, you're an economist. Can you tell me where we're at in terms of this particular economic cycle?
The current, just broadly,
Yeah.
we've been going full throttle for a few years now. So we have very low unemployment, and I don't necessarily want to say a peak, but we're at a very high level for a while now.
More questions on the bill, so?
Well, I do. It actually relates to the bill, Madam Co-Chair. So, does raising taxes typically slow economic growth or increase economic growth?
That's a very complicated question. It depends on a lot of how the money gets used. It depends on the nature of the tax. I think in the experience at the state and federal level, it's been kind of mixed as to what has ultimately happened in terms of the overall impact. The size of this tax at $1 billion a year, the economy, Oregon's economy is about a $200 billion economy. So to try and put that into some perspective.
Okay, so let's just say when we have an economic slowdown, obviously personal income tax revenue slows or decreases. Did you guys calculate that potential slowdown of that income tax revenue when you were doing the kind of the net on what this particular tax would produce?
All of the work that LRO does with law change estimates are tied to the current quarterly economic and revenue forecast put out by the state economist. And so the latest forecast that they're going to release one in a couple of weeks, May 15th. The most recent one is the March 1 forecast. I think they actually released in early February. So all of our projections are tied to that forecast. Within that forecast, they do have relatively some slowing growth over the next few years, but they have not forecast a recession. So that's not embedded in here. We forecast, we take their forecast as given and then add on, if you will, the law changes here to come up with our estimates.
Thank you.
Is that it?
Yeah.
Okay. Senator Taylor.